Hello, everyone. Welcome to our analysis of the latest GDP numbers. I believe it was last week, the Bureau of Economic Analysis, that's the BEA, they announced their second quarter GDP numbers. Sometimes this is called the advanced report. The reason why is because once a quarter ends, so the second quarter of 2018 went from April, May, and June. So at the end of June, the second quarter ends. Well, around July 31st, or in that area, you get the first report on the second quarter, and that's this report right here. But a month from now, they're going to revise this data. The reason being is not all of the economic data for the second quarter has been analyzed. So this is an estimate. So these numbers do change, but the number that came out was the GDP increased 4.1% in the second quarter. Now this 4.1%, this is what you call a quarter to quarter annualized. See, that's this number right here. So this blue line right here, that's 4.1%, 4.1 right there. And what that does, it takes the second quarter of 2018 and divides it by the second quarter, the first quarter. Let me erase that. The first quarter, let me make this a little bit bigger. It takes the first quarter of 2018 and minus 1. Oh, then what it does is we raise it to the fourth power. That's quarter to quarter annualized. Now, what does that really mean? That means if the rate of increase between the first quarter and second quarter, if that rate of increase continued for 4 quarters, that's why we raise it to the fourth power right here. It would increase 4.1%. So the economy didn't increase 4.1% from Q1 to Q2. What it did was it increased at a 4.1% rate if it continued for an entire year. Another way of measuring GDP data is year over year. And that would be, let me just erase all of this here. What we can do is I could show you how the data is. Geez, I gotta get a bigger eraser. What we can do is year over year, of course, it's very thin, year over year. We take the second quarter 2018 over the second quarter 2017 minus 1. And that's going to give us our year over year growth rate. And that was roughly 3.2%. I'll confirm that a little bit later. So you can get different growth rates depending upon what measure you use. Now, looking at this graph, we also have the GDP deflator. This is that gold line right here. That's a measurement of inflation. And as you can see, inflation has been pretty stable. Here's around 2% right here. You could see it's been growing within this band right here. But you could see how there's been this uptick in inflation right there. That's a bit of a concern. So inflation is now at a 3% annual growth rate, and that's got people a bit concerned. Now, remember, GDP numbers, if you break down GDP into its components, GDP, it's goods and services made for the household sector called consumption goods, goods and services made for the business sector, that's called investment goods, goods and services for the government, and then goods and services for foreign sector. That's called net exports. So this personal consumption here, that's looking at the growth of just this part of GDP right here. And you could see that on year-over-year growth, it's been kind of volatile, right? But you could see there's been this upward trend. And this is the largest portion of GDP. So C is around 70% of all of GDP. So that's been growing rather nicely. Now, net exports, you could see how these numbers are negative, right? That's because we run a trade deficit, because net exports is really exports minus imports, right? And if you import more than you export, this will be negative. And that's what you see here. But you can see that it's a little bit less negative. You can see how this is trending upward right here. That means the trade deficit is a little bit smaller. And so when the trade deficit gets smaller, that actually contributes to growth. And net exports, so remember the GDP increased 4.1%. Of that 4.1%, about 1% of it was due to this narrowing of the trade deficit. And people feel that that boost was due to this whole trade war talk. And I believe trade started to pick up in anticipation of possible trade sanctions. So this growth in exports may subside because a lot of people just pushed their purchases early. Now, real GDP growth year over year. Remember I told you how this is a second way of measuring GDP numbers, and you could see that this was in the second quarter a little bit below 3% right here. But again, you could see this nice upward trend. So this was a very good GDP report. This 4.1% was the fastest growth since 2014. And this is one of the reasons why we have a very low unemployment rate. Some of the things that are of concern is the possible trade war, as I mentioned before. And there's been some grumblings in the tech sector, and the stock market has been a bit volatile. So these are things that people are looking out for, because the question is, when will this party end? It will end at some point, but right now the economy is growing rather well. So that's all for now. If you have any questions, definitely email me.